Today I'll show you exactly how I made about $3,000 trading Ethereum. Now I did this using one of my very specific strategies. You see, if there's anything you learn from my YouTube videos, let it be that you have to stay consistent with a singular system. So right here we are looking at Ethereum, more specifically a 15-minute time frame. Now my immediate thought process when I went into this market was that I was seeing a market maker buy model. So let's establish exactly what that is. So market maker models come in sell side models as well as buy side models. This right here is a market maker buy model, meaning I am looking to long the market. That is why we're calling it a market maker buy model. Market maker models can also be identified as these V shapes in the market. That is my go-to way of describing market maker models. You essentially have to look for these V shapes. That's exactly what we're seeing here, okay? And so I am going to anticipate that the next target for price is the high that we're seeing up here. Now, if you've watched my videos recently, you also understand that I will often prioritize imbalances over highs and lows when it comes to liquidity. So that's exactly what we're looking at right here. If I now jump to an hourly time frame, you'll be able to see that I have annotated this hourly imbalance. Now, the reason why I've done this is because it is an imbalance that the market has yet to touch. A lot of people are under the impression that the market is only hunting highs and lows to hunt stop orders. But again, if you've watched my videos recently, you know that that is not true. Using imbalances as a form of liquidity can often be a better option for a lot of traders. So again, we have not hit this hourly imbalance yet, and it is an imbalance in the market, meaning the market is looking to fill in this imbalance. Having a target when it comes to actually placing a trade is often way more important than the entry model itself. Again, if you know where the market is going, well then basically any trading system will work. It's all about identifying the order flow. That is the hard part. Back on a 15-minute time frame, and I was anticipating a market maker buy model. Now, what's important to understand here is that market maker models will often have a displacement move, followed by a consolidation move, a displacement move, followed by another consolidation move, and then again, you guessed it, a displacement move. So again, that is exactly what I was anticipating. We call the first consolidation of a market maker model the first stage distribution. And again, you guessed it, the second consolidation we call a second stage distribution. Now, this can all sound very confusing because there's a lot of terms that are being used that doesn't really need to be used. And so these first and second stage distributions you can actually look at as just consolidations. So market maker models will often have, again, a displacement move, one consolidation, a displacement move, another consolidation, and then the final displacement move. That doesn't mean we can't have three consolidations within a buy side curve or a sell side curve of a market maker model, but it does mean that the majority of the time we are only going to see two consolidations. Now, I always recommend people to enter off of the second stage distribution and not actually the first stage. When you have watched the market displace, consolidate, and displace again, you're going to have way more confidence in the market continuing that pattern and displacing once again. So the reason why I recommend people to enter in the second consolidation of a market maker model is, again, because if you've seen that thing play out twice, which you have right here, if you waited for the second consolidation, well then your confidence is not only going to be better, but the overall probability of the market maker model itself is going to be much higher. Now, a market maker model isn't in itself an entry model, at least not in my opinion. That's not the way I treat market maker models. I use them for directional purposes only. And so I have an entry model that I combine with market maker models. The entry model I'm about to show you is what I like to call my reversal model because it works very well in predicting highs and lows of a market. And so that's why I named it my reversal model. Now, as you can see, this is not really a reversal. It's more of a continuation. But if I now jump to a 1 minute time frame, again, my long was placed right at this low. It kind of looks like a reversal pattern. So while on a 15-minute time frame, it might look like a continuation strategy. If I now jump to a 1 minute time frame, it does look like a reversal strategy. Now, if you're wondering where I'm actually placing all of these trades, I am using the toobit exchange. Now, believe me, I've tried a lot of different crypto exchanges, and a problem they all share is their complexity for no reason. The toobit interface is just super simple to use. They offer all the trading pairs that I'm personally trading on a daily basis. And if you're trading on a budget or just looking to improve your exchange, right now I can offer you a 50 free USDT by simply signing up with the link below. So again, if you don't have an exchange or you're looking to change, you might as well change with some free cash. Because as you can see, the market here does look fairly bearish. It does look like the sentiment is shifting. But scratch all that. Let's get into the actual technicals so you can understand what strategy I actually use to profit here. So back here to a 15-minute time frame, and if I now zoom in, you might be able to tell that we have equal lows right here. Now, not only do we have equal lows, but right below that, we have an imbalance, okay? We have a 15-minute imbalance and equal lows that kind of overlap. That right there is key. Now, would it matter if the low was created inside of the imbalance? Yes, it would actually make it higher probability, believe it or not. I like to buy lows that are created inside of imbalances, and I like to sell highs that are created inside of imbalances. Now, in a scenario like this, we go from one significant liquidity pool, which again is these equal lows, and then I'm going to anticipate that we move from that liquidity zone into the next significant liquidity zone, which again is that hourly imbalance that I just showed you. So in this strategy, I'm combining the overall order flow, which on a 15-minute time frame is bullish. I am going to predict the bottom by looking at the most recent significant sell side liquidity. I'm then going to anticipate that the market moves from one significant pool of liquidity to another, which again is that hourly imbalance. So to show you exactly what the trade looked like, I longed right at these lows at this imbalance. My stop was this low that you're seeing right here, and my take profit was again that hourly imbalance. Now, a way that we can make any trade that we take higher probability is to utilize the premium and discount zones of a market. I cannot stress this enough. If I now take my Fibonacci extension tool and I draw it from this swing low to this swing high that you're seeing right here, you can see that my entry is slightly below the 50% mark. That essentially means that I am going long from a discounted area. And as traders, we want to buy in discount and we want to sell in premium. So if you can make your trading system overlap with being in a discount if you're longing, or being in a premium if you're shorting, I guarantee you your trades will have a way higher strike rate. Now again, enough waiting, enough chit chat. Let's try and play it out and see exactly what ended up happening. And right there, as you can see, the trade played out beautifully. Now, you might ask, well, the market already hit the hourly imbalance before your fill, so why are you still entering? Well, the reason why I'm entering this is because, again, I was entering based off of the idea that this was a market maker buy model. And if this market maker buy model was a true market maker buy model, well, then it's going to finish at this very high. And again, if I zoom into this here, you can also see that the high that was created within the hourly imbalance actually failed to fill the entire imbalance. So there's still reason for price to go higher, but it all stemmed from that market maker buy model. Once you understand those, you really get a good grasp of the direction. So again, that right there was my trade on Ethereum. Again, as you can see, it looks pretty obvious here in hindsight. I mean, it is extremely bullish. It's just a picture perfect market maker buy model. We have that hourly imbalance that was not fully filled, so there's still inefficiency for the market to come fill. And overall, just a great trade where I essentially took advantage of the direction. So I hope you enjoyed. That was just a quick trade breakdown of essentially what I do on a daily basis. This right here is what I look for 90% of the time when I approach a market. And that is why I have an edge over other people, because this right here is something that I've looked for years on end. So again, the important part here is not really my strategy itself, but my discipline to follow that one strategy for years on end. That is essentially what separates me and a lot of other traders. I've simply developed the discipline to execute my system for years on end whenever it appears.